You've been misled. You've been told that the Federal Reserve prints money, but that's not the truth. The Federal Reserve, that enigmatic institution you've heard of, is often accused of printing money out of thin air. This narrative, however, is a sweeping misconception. It's time to dispel the myths and misconceptions, to delve into the intricate web of monetary creation. Are you ready to uncover the truth? Buckle up, because what you're about to learn might shock you. To understand the truth, we must travel back in time to the year 1913, the birth year of the Federal Reserve. In the wake of frequent financial crises, a sense of urgency swept across America. The economy was like a ship in a storm, without a lighthouse to guide it. The Federal Reserve was created as that lighthouse, to stabilize the turbulent economic seas and prevent future financial disasters. Its inception brought about a new era, where the government had a stronger hand in overseeing the economy. However, its role was not to print money, contrary to popular belief. Instead, it served as a regulator and a protector, ensuring that banks operated within set boundaries and that our economy remained stable and resilient. The Federal Reserve was born out of necessity, but its role in money creation is misunderstood. It's not a money printing machine, but rather a guardian of our financial system, a steward guiding us through the economic storms. If the Federal Reserve isn't printing money, then who is? The answer might surprise you. Indeed, it's not the government or the Federal Reserve that's responsible for creating most of the money in our economy. Instead, it's the commercial banks. You see, banks have the power to create money through lending. This is a process known as fractional reserve banking. Fractional reserve banking works like this. When a bank receives a deposit, it's required to keep a fraction of that deposit in reserve. The rest can be lent out. But here's the kicker. When that loan is made, it's not taken from other customers' deposits. Instead, it's simply added to the borrower's account. This new deposit becomes part of the bank's reserves, which can then be lent out again, creating even more money. This cycle continues, with every new loan creating more money. And it's not just small change we're talking about. In fact, the vast majority of money in the economy is created this way. So, while it's a common belief that the Federal Reserve or the government prints money, the truth is a bit more complex. It's not about printing physical bills, it's about creating digits on a screen, through the process of lending. In reality, every time a bank issues a loan, new money is created. It's not the Federal Reserve, but the banks that hold the power of money creation. So, the next time you hear that the Federal Reserve is printing money, you'll know the truth. Remember our journey to this revelation? We began with the common misconception, the idea that the Federal Reserve prints our money. We traced the birth of the Federal Reserve, revealing its true purpose: to maintain the stability of the financial system, not to create money. We then uncovered the surprising reality of how money is really made. It's not through the process of a printing press, but rather through the much less tangible process of banks lending money into existence. Every time a bank lends to companies and individuals, they're effectively creating money. This is the startling truth, a truth often hidden beneath layers of complexities and misconceptions. The power of money creation lies not with the Federal Reserve, but with the banks. And now, you're one of the few who knows the real story.